Everybody, it is Friday, the 24th of January, 2020. Hope you had a good week of trading. The markets were down a little bit here. Actually, the semiconductors, I accidentally colored red, but they were higher on the week by 1%. The rest of the indices were lower. So let's take a look at the charts here. We can see the S&P 500. We're looking starting here with a 30-minute time frame. And what I have on here is basically the action year to date. And the year to date volume weighted average price is what we came down to today. Here's our week to date volume weighted average price. We see that held as a little bit of resistance throughout the day, and we are now below a declining 5-day moving average, which tells us that we want to be a little bit cautious. We've had an incredible run in the market recently, and we're still in a primary uptrend. We're just letting off a little bit of steam. I think that the 20-day moving average is likely to be tested. That has held very well for this market. Since October, we've only been, closed below it once. So that's clearly an important level. Going into next week, though, we're going to be continued to held hostage by news events such as, of course, the coronavirus, and we have a lot of earnings due next week from major companies. So back to the daily time frame, we're at an important level, but right now, with it below a declining 5-day moving average, we're going to say it is guilty till proven innocent on the intermediate term time frame, but in a longer term uptrend. So it means take your foot off the brakes, let the market settle down and tell us what it wants to do. The Nasdaq, let's take a look at the 30-minute time frame here. Here's our year-to-date volume weighted average price. You can see we're relatively stronger as we're still a percent or so above that year-to-date volume weighted average price. In the daily time frame, we're well above that 20-day moving average. We're still hanging right around that measured move objective that we spoke about last week, really not making much progress from there. So with it below the 5-day moving average, and the 5-day moving average likely to turn lower here, I think that this is what we would be expecting to be the most likely scenario for next week, is something along the lines of this and coming down to that year-to-date volume weighted average price. Of course, it's going to be dependent upon individual stocks and how they behave. Yesterday I was on Yahoo talking about how I expected Amazon to be the next company in the $1 trillion market cap, and basically it came down below what I was looking at as a stop here today. So I'm not involved in Amazon. I still think overall it's a good looking stock, but they do have earnings due to reported on the 30th, so be aware of that. And by the way, when you're looking at the charts I have here, it always says the earnings date right up in here for any stock. If you look at Google, for instance, you can see February 3rd is the date for that one. So going back to the indices, the Russell 2000 is now down on the year, so we can see that's down 21 basis points. Last year it was a laggard. This year it continues to be a laggard. We were talking about the stops in here. Alpha Trend subscribers, we got stopped out of it. It is below a declining 5-day moving average and trapped below the volume weighted average price from this peak. Here's our year-to-date volume weighted average price. So we've got to take a look at this Russell 2000 as being a reason for caution. I would not short it if it were to break below here. In fact, what I think is likely to happen is maybe a flush below there and then some kind of rally that looks like this, and then we'll see how it behaves with that year-to-date volume weighted average price. I think it's just best to leave the Russell 2000 alone for now. The semiconductors gapped up to a new high today. Didn't hold those gains, but still very impressive. Intel had reported earnings and they held on to their gains throughout the session. So Intel really making a nice move up towards that all-time high, really, still back from 2000. It hasn't recovered that yet, so maybe it's going to make a run for that. Going back to the semiconductor index, though, we're still holding the rising 5-day moving average, and the year-to-date volume weighted average price down at about 145 is a level to be aware of. I don't think you want to be a buyer up here, but if you have longs, still continue to just ratchet those stops higher. In the biotechs, rather, we had noted a couple weeks ago the failed breakout, and we came back up and tested that level, and this week it failed to hold. So I was looking for a place to purchase, but because it kept pulling back and then started making lower highs and lower lows below the declining 5-day moving average, there was no reason to be involved on the long side, and we're below the year-to-date volume-weighted average price, showing lower highs and lower lows. Looking over to the daily time frame, we do have a rising 50-day moving average, so I think it's highly likely we get a bounce next week in the biotech index, perhaps all the way up towards that year-to-date volume-weighted average price, which right now is near about 120, and that's where we find the 5-day moving average. I personally don't like to play those types of bounces, but it is something to be aware of. The financials still, this box that they've been involved in, we broke below, but we are again above the rising 50-day moving average. We'll find out next week if this is just a flush or the beginning of something bigger. Typically with a rising 50-day moving average, it is just a flush out, but we're breaking, not only below the year-to-date volume-weighted average price, but the volume-weighted average price from that December low. So I think that, after bank earnings have been released, and now we're showing that this market is trading below the prior band of support, we have to look at this as guilty till proven innocent until it can probably get back up above 3065 or so. Apple, is due to report next week. The stock has held really nicely above that year-to-date volume-weighted average price. I think some other levels you want to keep an eye on are the volume-weighted average price from this gap. That's been important so far, and that's right down at about 315. Tesla continues to defy the short sellers here, showing that it continues to make higher highs and higher lows, and it broke to new all-time highs again this week and is doing a great job of holding on to those gains. So even with the stock now below the week-to-date volume-weighted average price, I'm sorry, that's the week-to-date volume-weighted average price is right here actually. We're above a rising 5-day moving average, and the buyers are still clearly in control. Earnings are due here January 29th, so that's going to play a huge factor. Be aware of the year-to-date volume-weighted average price in here. If you're looking for a trade, be aware of the direction of the 20-day moving average and where that's located as well. The market seems to be getting a little bit trickier here. Finally, it's not just up every single day, and that's a good thing. It's a pause that might refresh, or maybe it leads to bigger distribution. We certainly don't know, but that's why we're going to continue to stay focused on the action in the individual names at Alpha Trends subscription service, and be aware that we are in earnings season. It's time to just slow down, lower your expectations after a huge run like we've seen, and you can't make the big money every single day, so adjust your expectations and accept what the market gives you.